the government transfers some money to an entity with the condition that certain compliances needs to be adhered to, do you have a name for such transfer? Yes. IAS 20 calls it as government grants. Welcome to Let's Learn IFRS series. In this episode, we will understand what are all the different types of government grants and how are they being accounted. When there is a transfer of resources, it can be either monetary or non-monetary. Such transfer is called as government grant. When there is an action that is being taken by the government to benefit a particular entity or a range of entities, then such action is termed as government assistance. Please note, only government grants needs recognition in your financials, whereas government assistance needs only disclosure. Focusing on the government grants. A government grant can either be in relation to an asset or it can be related to an expense. For understanding the grant related to the assets, let's take an example of an imported flu vaccine that is very expensive today. To develop an indigenous manufacturing facility, government gives a grant of 5 million pounds. Here, the presentation of such grant can either be shown as a reduction in the asset, that is the manufacturing facility in your balance sheet, or it can be treated as an income, as a deferred income in your balance sheet. In option 1, the difference between the asset value and the government grant is considered and the balance is being depreciated over the useful life of the asset. Whereas in option 2, the total of the government grant is considered as a deferred income in your balance sheet and the allocation of such deferred income as income is being done over the useful life of the asset. In both the cases, the amount of net profit or net loss remains the same. It is just the presentation of your statement of profit and loss that varies. As far as a grant related to expense is concerned, consider an example where the government issues a grant to employ local women in an SEZ area for a period of 20 years. Here again, the entity can choose either to disclose this grant as a reduction from the salary expense or to show it as an income in the statement of profit and loss. Please note, though the overall net profit or net loss doesn't get affected by your presentation, the ratios used to measure the performances gets affected by a presentation of your income and expenses. So please deliberate and decide accordingly. Hope you got some very good insights about IAS 20. See you soon in the next episode.